Well, there was a big improvement on the share market today as bank shares rebounded, offsetting losses elsewhere. And that drove the ASX and All Ords up by around 1%, which is a pretty sharp rise. Though it's only managed to claw back a fraction of this week's losses, particularly yesterday's $57 billion wipeout, which was the market's worst trading day in 5 months. So yesterday, it was a bond sell-off which caused investors to panic as long-term borrowing costs for Japan, Germany, the US and UK surged to their highest level in decades over concerns about sticky inflation and government debt hitting new trillion-dollar records. But today, none of that mattered because some new figures came out showing the US jobs market is looking a little bit shaky now, with job openings dropping to their lowest level since September last year. So it was another case of bad news for the economy equals great news for the share market, as the odds of the US Federal Reserve cutting interest rates this month have now surged to nearly 100%, which in turn drove stocks higher in the US, UK and Japan. US markets were also boosted by a 9% jump in Google's share price after it got off lightly in court as a judge ruled the tech giant doesn't need to be broken up. Though the Hang Seng and Shanghai Composite were sold off because the Chinese government will introduce new rules clamping down on speculation in the stock market. In commodities, gold is hovering near record highs, while oil prices tanked as the OPEC Plus cartel, which includes Russia and Saudi Arabia, are meeting this weekend to possibly increase their output targets. And finally, the Aussie dollar has slipped to 65.2 US cents. And that's finance.